us live. Ramesh, let me first start off by asking you what you've obviously seen very strong growth. Uh, what is the driver for that growth for Q3, and how sustainable is that 20% plus kind of growth that you've clocked going into FY27?
First of all, thanks. Good morning. Thanks for having me. Yes, Q3 was an exceptional quarter for us. We reported a year-on-year growth of 35% and 29% in constant currency terms. It was expected. Q3 is a seasonal quarter for us. As you know, in the US healthcare, there is the open enrollment season that starts in November, December timeframe. And so the activity levels pick up. And so we expected Q3 to be strong, but it ended up being much stronger than we anticipated. So we think this momentum will carry over to Q4. So we've increased our guidance for the full year, which was 21% before. We've increased that to 22.5% on a constant currency basis. As regards the future, we've always guided organic growth in the low to mid-teens. And at this point in time, for the medium term, we are still maintaining that guidance.
Right. Mr. Gopalan, you've increased the constant currency revenue guidance like you've spoken to us about, but the margin guidance has remained intact at around 25%. Talk to us about why this guidance has not been increased. Are you expecting some pressure going ahead?
So, that's the EBITDA margin, right? So even though the revenue grows, the margin percentage doesn't grow at the same rate. We've always maintained our margins between 24 and 26%. We acquired a company called Broadpath last year, which was slightly margin dilutive to us. But based on that, we had projected a 24% margin at the beginning of the year. But as you can see, that margin has now moved up to 26% for the quarter. And for the full year, we had increased the guidance in Q2 to 25%, and that's the guidance that we are maintaining still.
And Ramesh, how is GenAI playing out in all of this? Are you getting positive tailwind from GenAI on your margin number? And is that a lever that you'll rely on going forward?
Yeah, GenAI is an important tool for us, right? If you look at it from a client context, our clients are under a lot of cost pressures, right? And their expectation of us is to deliver our services more efficiently. And so we are looking at GenAI and other transformational capabilities as a cost takeout or a more efficiency enabler. And that's how we've been deploying a lot of the GenAI use cases. Yeah, to that extent, it helps us meet our client expectations and keep our margin stable.
Okay. And Mr. Gopalan, you did speak about the Broadpath acquisition. Talk to us about what kind of synergies are you expecting from this, and how meaningfully is this expected to contribute to the overall pie?
In fact, a large part of our Q3 results was thanks to the Broadpath acquisition, because a lot of their work is tied to the open enrollment season. And so they saw a huge spike in revenue in Q3. And so going forward also, the synergies with Broadpath, they give us a lot of capabilities during the open enrollment season. But more importantly, it opens up a large opportunity for us to sell our services into their clients. And Broadpath, as I've mentioned before, has a wide number of clients in the mid and small market space. And so it gives us an opportunity to sell our wide portfolio of services into those clients.
Is there at all, and I'm trying to explore this, is there at all a positive tailwind if at all the tariff situation between the India and US get resolved? Because you've got such a large concentration in terms of revenue from the US. In fact, pretty much all your revenue comes from there.
Yeah, so the tailwind in our case is more because clients look at outsourcing as a lever to improve their profitability and reduce costs, right? So with the cost pressures in the US, our clients are looking more and more to service providers like us to help them reduce their cost of operation. So that's the bigger tailwind. And like you said, transformational capabilities like GenAI help us bring about that cost reduction. So that's the tailwind that we see. And we are also, as a company, increasing our capabilities in our transformational ability. We are looking to larger deal constructs where we take over an end-to-end operation from a client and manage it on their behalf more on an outcome-based model rather than an effort-based model. So all of these changes, we believe, are tailwinds that will help us grow in the coming years.
Okay, Mr. Gopalan, talk to us about client concentration. Your top 3 clients still contribute about 60% to the overall revenue, even though this has significantly come down on a year-on-year basis. What is an ideal number that you're targeting here, if at all?
Look, we've answered this question before, right? Our client concentration is also a function of the industry structure, right? The US healthcare industry, the top 12, 15 payers control about 2/3 of the market. And so our client concentration is also a reflection of that. But having said that, like you said, our client concentration has come from the mid 70s all the way to 60. And we believe over the next 2-3 years, it'll come down to 50 or below. But that's the target that we are working towards. And a large part of the strategy is to also grow our mid and small market very aggressively. And the acquisition of Broadpath was done in that direction.
And Ramesh, how should one look at the traction, both in terms of organic as well as, or rather, on your existing clients, how growth is panning out for you? And with regard to new clients, what are you seeing in terms of traction, in terms of demand?
So we are seeing a good pipeline. Some of the larger deal conversations obviously take time, but we are having healthy conversations with our clients. And like you said, the big focus for most of our clients at this point is cost takeout. And a lot of conversations in some of these larger constructs is towards taking out cost over a 3-5 year period. Having said that, we also see a lot of growth coming from our existing clients. And as you know, our existing client portfolio has always grown in double digits. And it continues to do so, and you'll see that in FY26 as well. So it's a healthy mix of growth coming from existing clients as well as our push towards opening more new logos in the mid and small market space.
Right. Mr. Gopalan, from what I understand, about last week, the Medicaid in the US has proposed some changes in CMS. And on the back of that, some health insurance stocks in the US were beaten down last week. Does this have any impact on the company if these changes were to come in place?
Yeah, so this was more towards future payments, right? So the premiums that Medicare Advantage plans get in CY27 is likely to be flat. That was the announcement that was made. That's a preliminary announcement, and the final rates will come out in the April timeframe. But yeah, a lot of the reaction in our client stocks was based on the fact that the rates haven't increased but are flat year on year. But that essentially means our clients will come under a lot of profitability pressure, which basically means it will open up more opportunities for us to provide additional services and help them take more cost out of their operations.
And Ramesh, debt-free payment, how does that play out? FY27 is the goal. How confident are you of that kind of number? And what do you do with the cash sitting on your balance sheet?
Well, today, like you said, the debt is still being repaid. So we use some part of the cash to repay the debt. And we're very comfortable. If you see our cash generation, we've generated enough cash to pay down the debt over the next 2-3 quarters. But we are also looking at M&A as an opportunity, right? So some of the cash will be used for M&A. And we've done a couple of acquisitions in the last couple of years. We are constantly looking for additional opportunities to improve our capabilities. And so we'll use some of the cash for M&A also. And we started paying a dividend in the last quarter. And that's something that we will take a look at the end of the financial year.
Okay, interesting. And one of the things, healthcare expenditure in the US itself seems to be going down. You spoke about some pressure also coming in. Just talk to us about if that is a risk that you are foreseeing going forward.
Look, the whole objective in the US is to try and reduce the healthcare spending. Today, it's over $5 trillion. So obviously, that's a focus across the board, both in the administrative cost as well as in the medical cost. But reduction in healthcare spending requires efficiency in operations and making sure that all the care gaps of the members are closed. And that's where service providers like us offer our services, right? So while overall healthcare cost reduction is a goal, services of people like Sagility is very important in getting to that objective.
Okay, thank you so much, sir, for coming in and speaking to us. Of course, absolute pleasure speaking to you and getting that sense. What we'll do is slip into a very short break. We'll continue conversation on the other side of this break.